Hello and welcome to another edition of Real Talk. Thank you for joining me. There's not a lot to report on both the global and the local scene at the moment. The economies all around the world are very stable, which is such a relief because it's been quite a chaotic time of late, and we all like a nice smooth sailing. I have to say that in the mortgage world, the interest rates appear as though they are going to settle. The room is absolutely divided at the moment. I had a meeting earlier on. Some thought the interest rates would drop another 0.25%. I personally think we've probably seen the last of the rate drops. If there's to be one more, that will be what it will be. I think the fact that 3-year fixed terms are coming out now, slightly higher than 2-year, I think that is a big warning signal now. Pay off your mortgage, put extra money in while you can. While the interest rates are this low, every dollar you put that's above interest is reducing your principal, and now's the time to really drive that home. I actually read an announcement from the RBA recently. The head of the RBA is basically starting to manage expectations that as soon as she can, she's going to start driving the interest rates back up. It's better for the economy when we're growing. The sooner we're at the tipping point of deflation, the better off. But of course, she's well entitled to do that because employment is up. And it's really interesting. I was reading a report about the poor in Australia. There's been some really interesting blogs lately about what makes the rich rich and what makes the poor poor. That's actually not what I wanted to talk to you about today. What's interesting is Australians poor are richer, becoming more rich than any other movement globally. And the reason gets down to that we've all got jobs, or the majority of people have got the jobs. So yes, we have poor in Australia. Yes, we have rich in Australia. We have all the different classes, but our poorer classes are doing better than any other around the world, and I think that's fantastic. Interestingly enough, some of the reports are saying that what is making the rich richer is it's come down to the hours they work per week. Interestingly enough, the rich in Australia work 11 hours more per week than the poor, but half of those hours are spent on some sort of wealth creation, either doing their tax returns, researching, personal development, meeting with financial planners. So I thought that was a very interesting aspect to report. And of course, there's a lot of talk about how many people come home, turn on the TV and sit down, as opposed to engaging in some other activity. So moving on, the census, most people now have filled out their census. I found it quite interesting that they asked how many hours a week you'd worked. And it was crazy for me because that's the week I'd actually done a seminar. I think I logged something like 73 working hours that week, but I was quite ashamed to put down I'd only done 4 hours of housework that week. So it's it'll be interesting to see what the Australian Bureau of Statistics do with all those facts and figures moving forward. Just moving on to property now. Obviously, the home owner market is still the most fueled. I cannot believe that the prices are still going up, and we are still in what I would call is not just a rising market, it's a bull market on the homeowner front. The investor market has really calmed down with the exit of the foreign investors here. Obviously, the big challenge for everybody is settling a lot of the apartments, and a lot of mortgage funds are cropping up here and there. The Malaysian government's got a mortgage fund going. Some of the big consortiums have got them going. So I don't think we're going to see the crash, smash and bash in the centre of the city that everyone's been talking about and forewarning us about. Just talking property, lately I've been benchmarking different sides of the river and different parts of Melbourne. I was looking interestingly at West Melbourne and North Melbourne. West Melbourne is a later developer than North Melbourne, but you'll actually pay more for a house in West Melbourne today and significantly more for a 2-bedroom apartment from west to north. So in West Melbourne, you're paying about $830 to $850 for a 2-bedroom apartment, whereas if you're in North Melbourne, it's only $735,000. But houses, west is 905, north is 900. Interestingly enough, there was no data for 3-bedroom houses available in the public domain, and I guess that's because the good old terrace house is still alive and well in those lovely areas. But if we were to benchmark it to Port Melbourne, it was significantly different. A 2-bedroom apartment in West Melbourne is about $575, whereas in Port Melbourne it was significantly higher, in sort of the mid-6s. Once you got into a 2 and 3 bedroom apartments, you were right up, even up to $1 million in Port Melbourne at the moment for a 3-bedroom apartment. So significantly different, certainly in that demographic. And obviously it has the beach to offer as well. So it remains a challenging market for investors, where to put your money. I still believe that the formula is outperforming everything else. If you buy a good property in a good location, right on transport, with shops, clubs, pubs, bars and restaurants, that's where you'll attract the big dollar. And I think that's the difference between your Port Melbourne and your West Melbourne. I'll close on that note. Thank you so much for joining me.